I want to thank their lunch sponsors, which is BW3's and CC's Pizza, for providing that, and be sure that you support these sponsors when you're looking for restaurants here in town. Before we get rolling with the panel, I wanted to showcase a couple of other programs that the Small Business Development Center has that may be of value to you or may be of value to people that you know. You already heard from Jeff Schick. He runs our Manufacturing and Technology Small Business Development Center. Jeff, did you have anything else you wanted to say? I know that you're never a shortage for things to say.
I have a hard time breaking out of my shell. For those of you that came a little bit late, we did give information about that secret code for the SBA and all government free money. And I see someone who came early. If you came early, raise your hand so they can see who you are. Okay, so those who came a little bit late, you get that code from all of those people that were here on time.
Okay, great. Also want to bring up to the podium Omar Diop, who runs our International Trade Assistance Center, and have him say a few words about his program.
Good afternoon. My name is Omar Diop. First, before I go over, I would like to know anybody here who wants to make more money. Okay. And I'm going to talk about two items. It's going to be why and how. What I do is very simple. I help businesses to put more money in their bank account and improve their bottom line. How? Take them globally. If you are interested in the program, please get in touch with me. Thank you.
And again, just like our core Small Business Development Center, the International Trade Assistance Center and the Manufacturing and Technology Trade Assistance programs both provide consulting, advising services. This is free of charge. So if you're interested in taking part of that, I'd encourage you to go to our website, which is sbdccolumbus.com, and check out some of the events and some of the things that we've got going on, and or contact our office and speak to Rebecca Russo, who is our coordinator for our program and our schedules. So we can absolutely sit down and work with you on that. The other thing I wanted to mention, just as a showcase opportunity, again, the Small Business Development Center, we do, it's actually, like I said, it's a national program. Our Small Business Development Center out of Columbus State actually covers 9 counties, and we have an unofficial 10th county that we spend some time in. And we are partners with the economic development entities as well as the chambers in most of these counties. So if you are in fact up here, I know we had a gentleman from Lancaster and some other folks from outside of Franklin County. You can work with our folks in your local area the same as you can if you came over here. We also are very active here at the Dublin Entrepreneurial Center. I have office hours here pretty much every Friday, except the first Friday, in which case Omar's here having office hours. And then we also have office hours every Friday at the Inc. at 8000, which is the New Albany version of the DEC, which is their business development program. So we have a number of opportunities for you guys to connect with us there. The last program I wanted to just do a quick spotlight on is that at the Small Business Development Center, we have a unique program that we do in conjunction with Rehabilitation Services Commission. And that is to help individuals that are working with RSC that have disabilities that may want to start their own business and to be entrepreneurs. We have 2 individuals that focus on that and work with individuals that are referred from the Rehabilitation Services Commission. One is Connie Sproul, who's over at the table with Becky. She's been helping you guys out as you came in. And one is Kevin Hammond, who's probably in front of his computer back here. Kevin also is one of our general consultants as well. But this is a program that we work with RSC to help individuals, again, with disabilities that have an interest in self-employment and building their own business to help their financial state. So that is a program that if you know somebody that may have an interest in that or may qualify, feel free to let us know and we'll help them work through the process. So with that, I want to move on to our esteemed private equity panel. We have spared no expense to bring them in here today. I think it was mostly the lunch. But what we're going to do is we want to try to continue that bridge where we started at 8:30 this morning talking about bootstrapping and how to take your idea forward, moving it forward into some public programs like SBIR programs, things of that nature, and then into some of the public funding programs like the City of Columbus, Franklin County, the State of Ohio, loan programs, et cetera, and then into the traditional banking setting. So we're kind of moving along that funding continuum. I guess I didn't realize it was going to be this far away. You'll see the presentation behind me. This presentation is not directly tied to what they are doing, but what it is it's a presentation that I do on funding and private equity that I just basically throw some slides up here. So it's not necessarily, Caroline may be talking about something on the legal side, and I'll put some other slides up that kind of pertain to what's going on. So this is just kind of an added extra benefit. So don't think that you have to look around and see what's going on with the slideshow. But I thought it would be something extra. This is, as part of our resource package for today, this presentation is on SBDC Columbus at our resource tab, as well as a number of small business links from my blog and website. We have a number of articles and posts that I've written on financing that will be available for you to peruse there also, as well as the presentation that Jerome did and some other things. So encourage you to check out the resource tab on SBDC Columbus, as well as check out ideas2deals.com, because again, it's my blog and it's really good, so you should be on there. So let's kind of do this. We have a lot of background here, so I'm going to let the panel actually introduce themselves, a little bit about what they do, a little bit about their background, and then we'll jump into some questions that I have. The same as with Randy. If you have questions, I'll ask for some questions. Just raise your hand and ask a question, and we'll try to address it the best we can. So with that, we'll start with Caroline.
Oh, perfect. Well, I just wanted to. Can everyone hear me? Okay. I feel like I'm at a press conference here. I just want to thank Mike for inviting me to be on the panel. I'm very excited to speak to all of you today, and I want to thank you all for coming and taking your valuable time out to listen to us speak. My name's Caroline Worley. I am a small business attorney, and I'm located in Westerville. I own my own business. There are 4 of us in my small firm. So I am also a small business owner, and am interested to hear what everybody else has to say as well. I grew up in a family business in town. It's a retail hardware store, so I apologize for those of you. I recognize that I've probably heard some of these stories, but I also worked at a big firm in town for a couple of years, and I was a Franklin County prosecutor. So kind of had a lot of different views of the law, but my current role is most of our clients are 20 employees and less, and today the discussion will be focusing, at least on my part, and how can we protect the companies, the owners, and I mentioned this to Mike, if at all possible, how can we avoid complying with these securities and exchange laws? So I won't be having a discussion with you on the details of that law, but mentioning that it needs to be complied with in certain circumstances. So that's, try to keep that short.
Rick?
Good afternoon. I'm Rick Coplin. I am a Venture Acceleration Director with TechColumbus. And what that means is that I get to work with early stage entrepreneurs and help them to refine their ideas and to test the validity of those ideas. So I spend a lot of time with entrepreneurs here in Dublin, coaching and mentoring, challenging, sometimes saying don't quit your day job, other times saying go for it. And within my work at TechColumbus and working with those entrepreneurs, sometimes that means getting those entrepreneurs some funding, very early stage grant funding or some pre-seed funding. Pre-seed funding basically means that you're not making money yet, but you're poised to do so. And in addition to that, I get to work with the City of Dublin's Economic Development Department. And the Dublin Entrepreneurial Center is probably the most visible aspect of that. We've been at this, we opened up the building about 2.5 years ago. And I think I was pointing out earlier, we've got about 62 companies in the building and growing. We're opening up a second location and beginning to lease space. We just signed our first tenant last night. And so we're excited about that. That's about half the size of this facility. And in addition to working with TechColumbus and the entrepreneurs in the City of Dublin, I also get to work with economic development professionals, chamber presidents and others, and people in communities from London all the way up to Marion and then all the way out to Bellefontaine. So I get to cover a pretty large area.
I'm Steve Jaffee, and I currently am with Reservoir Venture Partners, which is a local venture capital firm that is headquartered in Worthington, Ohio. We manage 2 funds. Before I talk a little bit about those, I spent about 13 years in the energy business, buying and selling natural gas, and joined a company that had 4 employees. We grew it to about 120 and then sold it to a Fortune 150 firm. I was then recruited by a venture firm to a specialty finance company, which had about 5 employees at the time. We grew that over about 3 years and sold it to another Fortune 500 company. So I've been inside very early stage entrepreneurial environments, as well as highly bureaucratic and frustrating Fortune 500 environments, and prefer the former. Reservoir manages about $60 million in capital. We are working on our second fund. We were formed in 2001, and we invest in early stage technology, which we define as including information technology, life sciences, and advanced materials. Our typical first check is anywhere from $500,000 to $1 million, and we're generally prepared to go up to as high as $4 million in an investment over time. And so my sort of day is composed of talking to lots of entrepreneurs, looking at business plans and trying to sort through which ones make sense for us to invest our time in and ultimately perhaps our money. So that's it.
My name is Kevin Heiser with QStart Labs. We're kind of a investment development startup advisory type company. We're a technology team, part of NCT Ventures here in Columbus, Ohio. And what we do is we help entrepreneurs and early stage companies either get from idea to commercialization, or now that they've proven and gotten a little bit of validation to their model, help them accelerate that by, in a roundabout way, investing in them without taking equity, so that we can free up more of their capital to go towards growing the business versus building technology. And then, of course, because we have a vested interest in them, we're also coaching them and advising them from a business strategic planning and sales marketing standpoint. My background, about 15, 16 years of sales and marketing expertise, everything from channels to direct sales to hunting and farming, building new divisions within organizations, and also consulting small businesses on how to grow, how to access capital and so forth. So we do a lot of work, both to some degree on an investment side, but as well as working with other investors to help them and their portfolio companies succeed.
Great, thank you. Let's do this before we jump into what address they need to send their self-addressed stamped envelope for you to send a check back to them in.
We provide the stamp.
Oh, okay. TechColumbus, that's the stamp. All right. Let's start down with Kevin, because I think that in a lot of ways business is business, and some of you guys, you're not going to be looking at venture capital and investment capital and things like that, but and let's kind of start down there and kind of work down this way. Kevin, if you were sitting in this audience and you were thinking you had an idea, you wanted to kind of grow it, things of that nature, what are some of the early things that you would be thinking about?
Well, there's quite a few things that definitely I'd be looking at. One, and these are the same things a lot of early stage investors are going to look at beyond just the friends, family, and fools. But one, what are the capabilities that I have? One, I have to understand, am I going to be able to execute on this idea? Maybe there's a point that I can execute on the idea, but I can see limitations in the future where I'm not going to be able to be the person to execute. So how am I going to access that talent to bring that on? Two, I want to look at the market, understand what is innovative or differentiated. Now, again, I come from a technology slant, so there's a lot of different industries, but you still have a core piece of you've got to have some kind of sustainable competitive advantage. So what's that going to be? Is there really a need out there? And I think one big thing around that becomes, is the problem that I'm trying to solve one that I'm creating so I can then have an answer to it, or is it actually a problem that's out there? Because as you start to look at how you're going to approach the market and are you going to get people to pay you $1 for what you have, it's kind of hard if you don't really have a problem that you're solving for them. There's so many other different things. How am I going to go to market from a sales strategy, those types of things. But early on, I would want to start looking at, is there really an opportunity here? How big's the opportunity? What's it going to take me to accomplish that? And then on a personal level, you've got to start to look at, what's the position I am? You know, a lot of people think, hey, I can just start a business because I lost my job, I have no financial resources, or they carry a lot of debt. So do I have my financial house in order to allow me to kind of take the punches that are going to come at me for a period of time to be able to execute, you know, where am I going to find that capital from the friends, family, and fools around, and so forth.
Steve, any thoughts?
Yeah, I think Kevin raises some of the same things that we think about when we're presented with an idea. One of the things that we see happen a lot is that people come in with an idea and they haven't really done anything to validate the potential scope and size of the idea, the potential for it being embraced by the audience or market that is involved. And what we look for is somebody, it's what I like to call quality of thought. You know, we don't expect anybody to come in. It's not that you need to come in with a 45-page business plan. In fact, I'd prefer not to see one because I have to read it if I get it. And what generally people do in those 45 pages is repeat the same thing 4 or 5 or 6 times. And so it's kind of refreshing to see a really crisp, concise 10-page plan. But the other thing I like to tell people is we don't work with Excel spreadsheets very often at the early stage of looking at companies, because there's just not that many numbers to crunch. It's generally some critical assumptions that you have to make sure you've thought through and gotten right. And we look for people that have gone through that quality thought process and have hopefully reached a logical and reasonable conclusion as to what they can do. And the last thing I'll comment before giving someone else a chance is the size of the opportunity. Oftentimes people come in with something that is actually a pretty good idea and could be a viable business, but it's not likely to be what we like to refer to as bigger than a bread box. It's just not likely to go beyond a lifestyle business. And in order for us to invest the kind of dollars we're talking about, we've got to believe the exit can be, if we're going to invest $1 million and the ultimate sale price is going to be $2 million, I'm just making up these numbers, that's not very exciting because we're not going to get all of that $2 million. The entrepreneur's got to get taken care of. And so you really have to look at whether or not this has a chance to be somewhat large. And so,
how large?
How much?
Number?
I would say if it doesn't look like you have something that could be saleable for at least $20 million on exit, that we would just full stop and say this isn't worth it. And so that goes to size of market and how segmented. But anyway, yeah, about $20 million.
So your return will be 20 times.
No. So let's okay. So if everybody can hear, the question was, if we want something to be bigger than a bread box, what is that? And I said kind of a minimum threshold size would be $20 million. And then the question was, well, does that mean we'd get $20 million? No. When we invest, we would own some portion of the company. So if we owned, let's just pick a number, if we owned 25% of the company and it was sold for $20 million, then we'd end up with $5 million and we'd have 5 times our money. And the remaining 15 would be shared among whoever the founders and other equity owners and investors were.
And we'll go into that in a little bit more detail in a minute. Rick?
Yeah, a couple things. I would talk to everybody that you can about the idea and about what you want to accomplish. It's great to start off with talking to friends and family. You're going to get about a 95% approval rate. No one's going to look at you and say you're nuts. But when you begin to talk to people out in the community, you're going to get one of two things. You're going to get great feedback, and ideas on how to improve what you're doing, and you're also going to get a little bit more realistic assessment of what you want to accomplish. So I would talk to everybody. And sometimes people are afraid of talking to people for fear their idea might be stolen. I haven't actually seen that yet. I don't know if you guys have or you have, but really what the difference is somebody who's going to execute on an idea, and you have to assume that when you begin to talk about it with other people that you're going to be the one executing on that idea. No one's going to have your passion. And the second thing that I would do is get integrated into the entrepreneurial community, attending events like this, attending events where people are presenting their ideas and getting real-time feedback, like Wake Up Startup, that's down on OSU's campus, or other events around, and just get into that and get used to it and understand what people are looking for. It probably takes a good year or so to get a feel and a working knowledge of how to fund and finance a business. And you need to do that while you're building your business, and the best way to do that is to be around other people who have done it and who are willing to help you.
Caroline?
Yeah, a lot of times when people come to me, they've already gone through the different chains that have been discussed. They've got a business plan, you know, they've vetted the idea, and they actually found someone who wants to buy in. And so at that point, they come to me and they say, what do I need to do? Do I just take the check and they're just an owner, or what happens? So my discussion starts with, well, first of all, we need to make sure you're not breaking the Securities and Exchange Commission rules. So how are you offering the shares of stock? How are you offering the investment? Are you limiting it? You just don't want there to be a public offering, and you want to limit it if you're a smaller company to actually offering to about 10 people. And I mean, you can approach other people and you can give people information, but you don't want to actually do the hard sell to more than 10 people if you want to avoid the rules. Then I would get into, well, you're getting this money from this person, so what are the terms? Are you giving them common stock? Are you giving them preferred stock? You know, are they going to have voting rights? What are your distributions going to look like? So if you issue a dividend, who does it go to first? There are several agreements that generally get executed. We start with a term sheet, which is kind of like a letter of intent, and it sets forth all the terms that parties have agreed to. There can be, we're going to talk about this I think later, but if someone's kind of wants to invest but they're not really sure, you can do promissory notes. You could get loans. You can do convertible notes, which are, again, I think we're going to talk about later, but basically you loan money that you can turn into stock later. I also talk to them about what are the assets of the company and have you protected them? Are you taking steps to register your intellectual property? Have you protected your trade secrets? There are just a number of things, and then once you do actually get the sale, you're going to want to execute something called a subscription agreement. And that agreement's going to basically inform your investor that they're coming in as an investor, that there's no guarantee or rate of return or anything like that, that they're giving you their money and they're putting it in your hands. And I think that's the one thing that will protect the business owner or the person starting the business, are those types of agreements where you're disclosing everything that you can. That's kind of my angle.
Super. Well, let's talk about it, because I think it got mentioned a couple of times. I have an idea. I think it's a good idea. Like I said, my friends and family think it's fabulous, and I should go for it. Rick, because you see, a lot of early stage. Obviously, we see similar type clients and cross-the clients. When you talk about validation of an idea, I mean, what is it that you're looking for, and how do you kind of expect people to move that way?
So when I talk about validating your idea, what I mean is, have you done some background research to understand, much like Steve talked about, is the market demanding this? And I think you mentioned you have a solution, but maybe no problem. Is there really a problem out there that you're going to solve? And you validate that by talking to other individuals, doing your own research and a lot of homework, and being open to constantly taking in new information and adjusting your idea in that sense. So when I talk with somebody and we sit down, I'm probing to see how much background work they've done and whether they understand much beyond the product or the service that they're talking about. Do they understand the market dynamics and maybe some of the competitors that are in the market? I'm not too concerned if there are competitors in the market. What I am concerned about is if you understand what those competitors are and how they compete and where you might be able to compete with them effectively, because everybody can be competed against, just depends upon how you focus your business. And so that's the kind of validation I do usually in a first meeting to understand, and very often I'll send people away with a list of things that they need to figure out and a list of resources to go to get that information.
Kevin, as you guys see early stage companies, when you start talking about validation on the IT side, might be, it's not any different. I mean, the results are the same. What are your thoughts on validation and trying to get there?
Well, I think Rick's points were very accurate. I know just from a business standpoint, and as we start working with someone, which usually by the time we're working with them, they've done a lot of the steps, hopefully, that Rick has either walked them through, because maybe it's somebody that Rick's coached, or somebody that's just done that naturally. Because I know I talked about 200 people a year. We selected 10 this year to launch, so very small percentage because a lot of the ideas just aren't ready yet. As you look at the validation from a standpoint of technology, there's a couple things that you have to start to think about. Is one, as Rick mentioned, the competition. You know, if you're looking at a marketplace, having competition there is excellent because that means chances are there is actually a problem that is being solved. But you also have to look at that competition a little bit closer. Is the only competition some very large organization with lots of cash that if your idea is great, they could immediately do themselves because it's not that complex, there's no real entry barriers or things of that nature? If so, not saying not to do it, but it's something that needs to be taken into consideration. The other thing is there's a lot of ways when you start to go through the technology process of how do we actually start to get steps that are validated so we can figure out how far we go with this idea. So early on, you may have a vision for this wonderful, whatever the solution is, whether it's a medical device, it's probably a little bit harder. Steve can probably talk more to that. Technology, web-based is always probably an easy one to talk about. We've got this great vision for this wonderful product. It's going to be huge. It's going to change the world. But if you build the whole thing, we've all probably seen this, a lot of those companies go out of business before they ever release the product because they're $3, $4, $5 million in development. In fact, I'm working with a group out of Florida that back in 1996, they spent $7 million on product development and never actually released it and ended up going bankrupt, and the product's just sitting there on somebody's shelf in source code. So what are the right things that we can figure out? What's the one key objective that we can solve, or the one-dimensional objective, especially if you're bootstrapping? What can we solve very quickly that somebody's willing to pay $1 for, that we can find out that yes, we can get somebody from, they read our marketing information, they clicked yes, I want to sign up, and actually signed up and pay us $1, and allows them to say this is wonderful, it's worth $1. Now the next piece of validation is, are they asking for something more? Well, if they are, now you can start to build your product that way. There's other validation techniques, obviously market research, as Rick mentioned, some expensive ways, some lower cost ways. If you do need to get some lower cost validation and almost like survey type results or market research, a great company to use out of Chicago is lab42.com, and they're able to allow you to use social networks to be able to capture data about what you're doing very quickly, and they present it in a very meaningful manner, which is also excellent when talking to investors.
Now, the one thing that's important to note is I think that, you know, he mentioned earlier, I mean, you know, he talks 200 people, they fund 10. You know, that's not, that's actually a lot out of 200. But what he's talking about, what Rick's talking about, regardless of what you're doing, is what you need to be thinking about. I mean, if you have, you know, we used the term earlier, lifestyle type company. If this is a more traditional type of business that has a more traditional growth path, that is maybe a consumer product or it's a service or something like that, you still need to be thinking these same things. You need to validate. You know, unless you have unlimited time and unlimited money, you need to try to figure out what's going to work and how you can move this forward before you go in and spend a bunch of money and then maybe have to make an about face, start over again, do some different things because you haven't really tested the market. So when we talk about validation as it relates to technology companies and investable companies, it's not that much different than what we would expect you to do with with any sort of business. So if you don't feel that you necessarily fit into this criteria, you know, the things that we're talking about are still going to be valuable for you to be thinking about. So earlier on, Jeff talked about bootstrapping, you know, things of that nature, friends, family, founder. And that's where you get some of this early funding to do some of this validation, some of this build out. When we talk about bootstrapping too, the farther you can push out the need for external capital from an investor or somebody who wants to buy a piece of your company, the better you're going to be. And we're going to spend a little bit of time on valuation, but you know, we talked a little bit about it earlier. If you are here today and I have an idea, and I go to Steve or Kevin or somebody to try to talk about this, if I have an idea and that's all I have, the company may not be worth a lot of money. So if I need $500,000 and the company is practically worthless, you know, how much are they going to own if they give me $500,000? They're going to own it all, right? So you need to be working, getting customers, building value, trying to build out the product, talking about intellectual property, getting some customers, getting some revenue, so that you can increase the value of your company before you get other people in, okay? So that's what's going on when we're talking about bootstrapping, okay? And we're going to talk about the valuation piece a little bit, but again, it's going to be at a high level. At the early stage, you have a question or you're stretching? Okay. Be careful, because I'm right on.
Question over there, Mike.
Yeah.
There seems to be a disconnect between an entrepreneur starting a business and so I get that exit plan. So generally when you start a business, it's not, you don't do that so, hey, I get out of this as quick as possible. You guys want to get a return on your investment. That's been a lot of successful businesses that you just, you know, household names, they're not businesses where a person started, but you know, hey, 5 years ago, get out of it. So how do we work on that disconnect between an entrepreneur? You know, you want the entrepreneur to think about the exit strategy, but at the same time, not necessarily getting into it with the idea like, you know, I'm starting something not finished.
Well, let me rephrase that, or you know, repeat it so you guys can hear it. He was talking about the building a company with an exit strategy. So, you know, obviously a lot of companies do not have exit strategies. A lot of well-known brands have built out that way, and that, you know, a longer-term strategy, you know, can make sense. But I think that the issue where you need to be starting to think about exits is when you're taking somebody else's money. And if you're taking investor dollars, and I'll let you guys kind of talk about that, you know, it's not that they want you to get in, get out, and you know, create something that's not valuable. There's a reason that they need some sort of exit strategy as it relates to their investment. So you guys can address the question, kind of address that, and Steve, if you want to kind of touch on that.
Yeah, I'm not sure if it's a disconnect or not. You know, the idea of needing to exit. The way I like to think about it, though, is a little bit differently, which is, if you're building a business, build it as though you're going to own it and grow it forever. If you do that, you're going to build a great business. It's going to be profitable, and you will have options. And so to the extent you want to stay in that business and don't want to give up what you've built, there are ways to get liquidity for your investors. So if you're able to build an entity that started very small and 5 years later is seen as being a valuable platform by someone else, then earlier investors who went along not forever but for a finite period of time in order to create some value can get that value by selling their ownership, hopefully at a very stepped up rate, and the company can sell some shares alongside, still have capital to grow. So it's not necessarily a disconnect and or a conflict of interests. If you build something of value, you will have options in order to create liquidity for those people who invest to get out for, want to be in for a 5 to 8 year, 7 year period.
Yeah, there's a desire for the investors to get paid out. I got some slides on here, and a lot of times I'll talk about the difference between a more professional investor and a more strategic investor. And a professional investor is, investing a portion of their personal funds of their portfolio to trying to get a larger return. This is a strategy on their part. Somebody that I would classify as a strategic investor may fall more into this kind of the next stage of this friends and family, where they like the idea and they don't do this very often, and they're willing to throw a little bit of money in here. The challenge for those folks is that getting a return, getting their money back, getting a return sometimes is a long process. I have a friend who's a very, very knowledgeable attorney in town that a few years ago sat on one of these panels and said that he put an investment into a company that was going to, do this, do that, and exit and high return 12 years before he was sitting on that panel, and they had not done it yet. And he had no way to get his money back. Now, they're still viable, and he got to say he was an owner, but, and I haven't talked to him about it, but that was probably 5 or 6 years ago, so now he's probably up to 18 years that he hasn't got his money back. So it's just something to think about.
I want to just add an example just to, I always think it's easier to think of sort of an actual real life example as opposed to just a concept. We are in the midst of selling a 20% ownership interest in one of our investments. We've been in that investment for 6 years. I'm going to either multiply or divide the numbers so these aren't going to be, I don't want to breach any confidentiality, but this is a situation where, let's just say we had $1 million invested, and somebody's willing to buy into the company at a $100 million valuation. So if we sell 20% of the company, there's going to be $20 million of cash to be distributed. Our ownership, let's just say, it was 10%. So we can sell 20% of our interest in this company and receive $2 million, having invested $1 million. So the company's still being run by the same people that founded it. The management team is intact. We will get $2 million, which is twice what we invested, and we still own 80% of our position in this company. That's a great outcome. And we've been in this deal for 6 years. We may end up being in for another 3 or 4, and we just think the value is going to keep going up and up and up. But there were reasons why several of the investors wanted to create some liquidity. So that's just an example of what I described earlier.
Let me jump to something real quick, because some of you guys have some intellectual property and how they need to be dealing with that. So I'll jump to Caroline here from the legal standpoint. Individuals that have intellectual property, they have an invention, they have something they put together, whatever that may be. I mean, how would you recommend them to kind of be proceeding in the early stages of the company?
Yeah, I mean, if at all possible, I like to see people register their intellectual property. So if you create something and it qualifies to be registered as a copyright, which is some, could be software code, something written, music, that type of thing, or a patent, which would be, like your iPhone, there's a patent on that, or some kind of mechanical thing you've created, or something you can trademark. Obviously, those are the assets of the company. And if you can protect them by registering them and establishing ownership, that gives them value. But there are some things that can't be registered that don't qualify. So a lot of business ideas, they're great ideas, but they don't fit within one of those 3 categories. So Rick, you were talking about approaching people and talking about your ideas. Yeah, we don't see a lot of ideas stolen. Doesn't happen too much, but I don't know if anyone saw, and I don't know how accurate this movie is, but The Social Network. Did anybody see the Facebook movie? That was a pretty good idea. I mean, it sounds kind of silly, but I recommend that if you're going to approach someone that you think might be interested or have the wherewithal to carry out your idea or go tell it to someone else that can, I like to see people sign non-disclosures and confidentiality agreements. Those are the ways you can, you know, protect them as much as possible and not go around disclosing to anyone. Don't go to the bar at night and tell all the people in the bar what you're doing. But again, I don't think it's a huge problem. Just those are the ways you can do that, and that's very important because it helps, again, establish valuation in the company.
Now, I put this up not to disagree with what she's saying. I agree with what she's saying. And Steve and I were talking about this at the beginning. When you're early on and you're talking to people about what you're trying to do, or you're approaching one of these guys. I mean, we get people that approach us. Rick gets people that approach them. Everybody in this panel gets people that approach it. And what's the first thing someone were doing? They're dropping this NDA, and they have an idea. You know, and Steve, kind of share with what we were talking about earlier as it relates to, you know, dealing with pretty much anybody up here, as it relates to that.
So I got my phone rang, I answered it, and it was a guy that I'd met something like 8 years ago. I kind of vaguely remembered him, and he had an attorney on the phone with him, which I thought was interesting. And he proceeded to tell me he had this great idea, and he'd like to present it. And I said, well, before we get together, can you provide me with an executive summary, just something so I know whether or not, because it's silly for us to waste our time and yours if there's just no way that there's going to be an area of mutual interest. And he said, sure, I'd be happy to provide that to you. We just need to get you to sign an NDA. And so what I said to him is what we typically say, which is, we would be willing to sign an NDA. We don't sign them very often, but the first thing you need to do is share with us enough to convince us that there is something that we really need to protect. Because if there isn't, then it's really not a good use of anyone's time. I've got to read that NDA. They're generally not that hard to read, but you know, technically if I were being really prudent, I'd have an attorney review the NDA, and it takes time. And so I said, do me a favor, ponder what you have, send me what you're comfortable with. And this was 2 days ago. Yesterday I got an executive summary, and after about 3 minutes, it was very easy for me to determine that we would not be interested in this plan for a variety of reasons. And that's one of the reasons that we try to avoid them. You've got, if I signed an NDA every time somebody asked, and we look at between 150 and 200 plans a year, we'd have a lot of pieces of paper in the file, and I might not remember who I signed what with, and it's just not a great practice for us to be in. So that's the way I tend to look at it. Now, I think what Caroline was talking about is a little different, which is if I have an idea and I go to a friend or a potential employee, colleague, and say, I'd like you to work with me, but before I open up this idea, you need to agree to certain terms. That's a little bit different scenario, and that's one where, and for anybody who's seen The Social Network, there were a lot of classic mistakes that were made that caused all of the, what became a terrific story.
I'll add a little bit to the NDA thing. Our business really operates a lot on trust and reputation within the marketplace. And Steve is not going to do anything that impugns his reputation, because as soon as he does, he's unable to do business in the community. And that's the same, that's how we think about our business at TechColumbus. I'm sure, Kevin, you think of it that way. A lot of it's on trust. We've got a great example of two entrepreneurs that I'm working with separately right now. They have very similar ideas. I've sat down and talked with both of them about, this other person exists, I'm working with them, I will not share any of your information with this other person. At the same time, I'm encouraging these two guys to get together, because I think there's probably greater capability for both of them to pull off a similar idea than it is for them to be one-on-one. And both of them have been comfortable with that. And so I think just building up the trust in the marketplace and then maintaining that trust is critically important to what we do. If we didn't have that reputation in the marketplace, we wouldn't be in business at all.
Kevin, do you have a comment?
Actually, I think Rick stole mine.
Okay.
The one thing I was also going to say is, because everybody, and again, when you're dealing with a professional level, you've also got to look at it from all of our points of view. It is very rare that we probably hear an idea that is unique. I know, gosh, it'd be June of last year, I heard an idea and I thought, wow, I've actually never heard this idea before. And I thought, I'll never hear this idea again. And lo and behold, 3 weeks later, I had another person from another city in the state come in, sit down with me, and pitch almost word for word the same idea. I chose not to work with the first person because I didn't believe they could execute. The second person, we're actually in the phase of starting to go through the process of evaluating and working with them. The other thing with NDAs are, if you do have somebody who's willing to sign an NDA, because there are times that I'm willing to, the one thing you cannot ask somebody in any of the areas we work in is, sign this NDA so I can share an idea with you, and then I'm going to put a no-compete clause in there that says you can never work with anybody else with a similar idea. And I see that all the time. And it's one of those things that's not a fair thing to ask from us, because we're going to be respectful of your privacy. We're not going to share your information. But at the same time, if we choose not to work together in one way or another, you can't tie all of our hands. Some have limited partners they have to answer to. They're trying to deliver value to their shareholders. Anybody like myself, as a part owner in a business, we have to take care of our shareholders. And if I'm constantly whittling down my market, well, then I have nobody I can work with. So it's something you've got to look at both sides of the coin.
Just to point out, at the very beginning, Jeff mentioned this yellow form for the SBDC. If you complete this yellow form and you become engaged with us as an SBDC client, there is a confidentiality in that. I won't sign an NDA, but based on what I do, I'm not allowed to share anything that you're doing without your consent. And that's one of the things that part of what the SBDC does. So there is a confidentiality with anything that you're doing as you relates to us, unless you say it's okay, because we're going to, in Rick's situation, we're going to get some other people involved or some things like that. So you have to authorize it, but that is part of what we do. Gary?
Earlier somebody mentioned something about investors have a kind of ownership, quote unquote, in the business. And then you also mentioned something from a legal standpoint, which you also brought up later about a company had invested or made an investment, and yet they couldn't get out or they hadn't got the return yet. So how do you reconcile the two parties? One of them wants ownership and a little bit of control, and you're giving that up, and yet you can't guarantee their income that they're looking for. Where do you strike the balance?
Well, let's kind of go that. Their question was, it's kind of how do you strike that balance between you have an investor has certain things that they're looking for, looking at milestones that you've now put in the plan, your execution and things of that nature, and other situations that happen, you may not reach that. Rick was part of a entrepreneurial venture in Central Ohio a few years ago, and I know you went through a number of things with the growth. Do you want to talk about, I don't want to say heart attacks, but can you talk a little bit about your experience and maybe how that related?
Sure. I call it my Berenstain Bear approach because what I learned there I wish that I hadn't done, but it turned out to be, brought me to where I'm sitting today. So early on, there were two founders of this company, and they asked me to join them with some business experience. I was, at that point in time, working with Bank One, so I left 90,000 of my closest friends and went to work for this small company as employee number 3. We were doing some really groundbreaking things in the industry. Nobody else was doing that. We did pretty well for the first couple of years, and we began to stumble. What I didn't do early on was get with somebody like Carolyn and take care of some of the legal aspects of ownership. So over time, I think I earned maybe 2 to 3% of the business. At the same time, when we were growing, we couldn't sustain the growth that we had for a while, and then we weren't growing enough. And so the company actually began to stumble. We didn't go out and get a lot of assistance. We just didn't know to do that. And so what we ended up with at the end was the two founders and myself had the most ownership in the company, and our one founder had about 50%. He did not want to go below that 50% for fear of losing control. And once that became known, we were unable to go out and get other investment. So what we should have done was talk to somebody like Carolyn early on. We should have had buy-sell agreements among ourselves. We should have understood what kind of scenarios were going to play out as the company grew and either prospered or faltered. And then we also didn't go and talk with folks like these two gentlemen here to get insight into the business from people with greater experience. So the ownership issues became tenuous. It became very stressful. The three of us went through various periods where we weren't talking. We all went through periods where we didn't pay ourselves, probably for a total of 2 years. We're all good friends now, but during that time it was very rough. And I think if we had worked with somebody like Carolyn, it would have been much easier. We could have just referred to the original documents we had in place and said, well, that's how we're going to do it. Instead, we ended up fighting it out. It cost us tremendous amounts of time within the business, and we ended up being in a position where we had to sell. So we had a somewhat successful effort, but the overall cost to each of us was far beyond what we actually got from the sale of the company.
Yeah, Steve, how do you, to that point, when you're looking at, when you're getting ready to do, you're looking at a plan, you're kind of moving forward on that. I mean, what is your expectation around kind of what Gary was talking about? I mean, I say, okay, I'm going to do this much, and I'm going to grow, and I'm going to do all these types of things, and I need $200,000. You put $200,000. What are you really looking at to give you a comfort level that your $200,000 is going to be deployed correctly?
That it will be
deployed right, used right.
Well,
you know, to get to kind of where you're saying you're going to get to.
Okay, so making investments is just a huge exercise in risk management, and so when we invest in a particular security, and that security has all kinds of related documents, and I'm not going to start listing them, but unfortunately you don't sign one easy document, but somewhere in this collection of legal contracts, there are a variety of things that are spelled out that help protect us. And so I'm going to just think of the things that come to mind from a practical standpoint. So there's a requirement when we invest that we be provided with monthly financial statements, as an example, within so many days after the end of each month. That there's, in our case, we require an annual audit. Some firms or angel investors might only require a compilation, a review, but we also have the requirement that each year, let's just say the fiscal year began on January 1, each year there'll be a budget developed that will be agreed upon by the board. And perhaps maybe the simplest way to think about it is when we make an investment, we require that there be a board of directors. The board of directors consists of so many people. All of the voting rights are spelled out in that agreement. And typically, our favorite, or I would just say the most common arrangement is a 5-person board where you have 2 members that are representatives of the common chairs, 2 members that are represented by us, the preferred chairs, and 1 independent. And the board has responsibility for governing the company, and you can't, as a founder, you can't do something that doesn't have the approval of the board, despite the fact that you might own 50, let's say you own 51%. But in order to, as a means of our protecting ourselves, we go through and spell out exactly how all of the voting and all of the governance is managed. And those are give-ups. If I founded a business and I own 100% of it, before I take X $100,000, I have to understand that in return for that money, I'm giving up the right to do certain things without the approval of others. That's a big deal when you're used to being able to call all your own shots. But it's through that process that we protect ourselves and hopefully increase the probability that we can all make money and have a happy result.
Any specific questions now?
A lot of startups start as LLCs. Is it generically that you're going to switch to C Corp, or can you stay an LLC?
The question was about legal structure of the company. So, and that was something I was going to ask in terms of structure. If you start out as an LLC and you're going to start taking investment dollars, especially if you're going to start taking VC dollars, you have to restructure the deal as an LLC. Okay, C Corp, should you start as a C Corp? Whatever your thoughts.
Yeah, it kind of depends on a couple things. First question I always ask is, what do you want to do with this company? Are you going to keep it? You're going to be the sole owner for a year or two? Are you going to add in maybe 2 or 3 people? Or are you planning on going out and getting a bunch of shareholders? And then, you know, you can always switch. It's just kind of a process. An LLC is easier to set up, and I use it a lot of times with a single owner business just because it's less costly and it's easier. When you start adding in other owners, that's when it starts to get a little bit more complicated, because now there are people to negotiate with. You're not just on your own. But if someone knows from the start that they're going to go out and bring in a bunch of investors and they have a bunch of people interested, we'll usually set up a corporation for that. It's a better vehicle to do that. The other consideration that comes in a lot of times is I bring an accountant in and say, hey, what's the best, is the corporate structure better for this entity, or should we just stick with the LLC? So there are, S Corp, C Corp, different tax classifications that you can do. So it sort of depends on the situation, and that's why you want to sit down with an accountant and an attorney and determine what that best situation is for you.
Gary, do you have a question?
Yeah, that was my next question.
Yeah.
Become a partnership, because now you have to mess with that.
Okay.
But in Ohio right now, most of the two vehicles used are the corporate, are the corporate structure and the LLC. And I know that the Ohio Tech Angels, don't you have to be?
Yeah, generally they want a C Corp.
A C Corp, yeah, okay. So that's another situation that would make your decision pretty easy for you.
And one thing about your corporate structure is that what Carolyn says is exactly right. You can change your corporate structure in the future. So starting out simply with an LLC, maybe when you raise funds in the future you need to be a C Corp. That's not a big problem. And having a great relationship with your lawyer and your accountant over time will help make those decisions and timing those decisions easier.
Carl, you have a question?
Yes. Particularly for Steve, if you have a business owner that you see your plan is profitable, but it's just the rate of return is lower than what you all expect, do you encourage them to revise it? That way, if they want to come back to you, because I think you said your cap is pretty much $20 million on your return, would you ask them to revise it and then bring it back where you can see the return that high?
The question is if somebody's speaking to one of the VCs or speaking to Steve or Kevin or whoever, and they don't meet the thresholds for investment, what advice, I guess?
Yeah, when we have someone come in, it may be that there are things that are just related to the particular idea, the industry, that limit the size. And so in those instances, there's not much you can do. You can't change the fact that if you came up with, let's just say you came up with a really clever app for the iPhone and Android operating systems, but it was likely that 10,000 people were each going to pay $1 for it. There's not much you can do to change that. So in a case like that, we just say, and I gave you an extreme example, that's something that's nowhere close to what it would take for us to get interested. But in that case, I don't think there's much we could do. But oftentimes people will come in and they'll have a way of thinking about how they're going to go about the market. And we might try to help them think through their approach, the nature of the product, and whether or not, if they were to think about some things differently, it could be a larger opportunity. And so that is part of the process we go through with people. It's very rare that somebody comes in and you say, wow, this is everything I was looking for. We're going to invest. And that happens in a week. I mean, it's a fairly intense process. Normally, we find things that are missing that we talk about trying to fill in. We may see from a human resources standpoint, we've got a great technologist, but we don't have anybody who's got any experience with hiring people, and so we might try to introduce them to others who have some of those resources. And so it does tend to be a very close working relationship. In these investments, it's not like buying a common stock on the New York Stock Exchange and you call the broker and say, buy me a couple hundred shares. This is a long-term commitment. We generally serve on the board of directors. It does go on for years, and so there is a lot of give and take and back and forth. So we do try to help where we can.
Got a question here.
My question is there a particular model that the Columbus technology entrepreneurial community is using to create the technology hub here, like Silicon Valley or Boston, or some kind of combination or something very unique? How are you going about building the technology entrepreneurial community here?
Well, I guess this is a good time to kind of transition to the TechColumbus question, which is perfect because that's what I was going to ask next. Because I think it relates to even what you had asked. I mean, we get people to come into the SBDC, got an idea, you know, is it what kind of manipulations or, you know, we need to make some changes, adjustments. You know, it's just really understanding the market, looking at the market, things of that nature. You get the same thing.
Oh, yeah.
I mean, kind of talk about, you know, address the question there, but also talk about the TechColumbus model. Now, Jeff put that up earlier in his presentation. Kind of talk about, you know, the process you guys are doing is moving these guys through.
So the great question about the community here, and at a very bottom level, what we're doing to push that community forward is that as a group, and this is Steve and others, they're making investments in entrepreneurs and companies, and those investments are eventually going to pay off or not. Those entrepreneurs are going to be successful, or they won't in this time. We hope they'll come back and do it again. Over time, what we have, and we're starting to see this now in our community for about the past 2 or 3, 4, 5 years, is we have serial entrepreneurs. We have what I would like to think of as a handful of serial entrepreneurs in the community right now who have done this and will do it multiple times. That's what they've indicated, and that's how they think. What it's going to take to get to a community of that stature, you know, maybe in Austin or something, and we're not that far behind, maybe 5 or 7 years, are those serial entrepreneurs who do this over and over and over again. People that go and work for these startup companies over and over and over again and learn that process and begin to lead that community themselves. So from a structural standpoint, TechColumbus supports these entrepreneurial activities through our networking initiatives, all the things that go on here at the Dublin Entrepreneurial Center, including events like this. We are trying to bring these entrepreneurs opportunities and set the conditions, essentially, for the entrepreneurs to get together and begin to work together. So that's what we do from a structural standpoint. What Steve does from a structural standpoint is he invests in these companies, does a lot of coaching and mentoring, and he talks about a long-term relationship, and that's really what it is. You're getting married when you take an investment. You want an active investment, but you want an active investor who is going to help you push your business forward and provide advice. Those relationships in turn into additional relationships and opportunities in the future. And so I hope that answers your question, but that's really what's going on here in the community now.
Let me point out one thing too, as it relates to the TechColumbus process. Now, Jeff put this kind of continuum up, and if you go to the TechColumbus website, you're going to see, I assume I've been there for a while, I guess. You're going to see, you know, there's a Tech Genesis fund, there's a new acceleration fund, there is pre-seed fund, there's Ohio Tech Angels, things like that. When you come to either the SBDC and start talking about that, you come to Rick and TechColumbus and start talking about that, it's not an application process. It's not the same thing. I mean, QStart and Reservoir, there is no application type process. It's really, especially with us in TechColumbus, it's very much about engagement, kind of working with, providing you some guidance, providing you resources and connections and things of that nature. If you're going to go, I mean, there's exceptions to this, but I mean, if you're going to move through the TechColumbus process and you want to potentially, you think you need to get a Tech Genesis grant, you know, I mean, that's 3 to 4, 6 months. I mean, depending on the business, I mean, it can vary. I mean, I've seen some move relatively quickly, but they, you know, have gone through and done some stuff in advance. So.
Yeah, the ones that move quickly through the structured system as it is today are individuals who have done this in the past. And so they have some history, both successes and failures, but we know the individuals, we have relationships established, and those relationships help guide us in our decision making. They aren't the be-all, end-all, you know, because we do look at the numbers very closely, but it's the relationships that matter a lot. And even people who we've worked with in the past who come to us with new ideas and say, hey, I've got a great idea, I want to get some Tech Genesis money. We say, well, let's sit down and work through this because we need to have a pretty full understanding of the idea and the opportunity and the potential before I take it to my cohorts at TechColumbus and say, I think we need to get these people into this program or that program. And then it takes even more work before, as a TechColumbus Venture Acceleration team, that we're willing to put these individuals in front of our committee that makes those investment decisions. And Steve sits on this committee. And so it's also an issue of internal credibility I don't think I brought any really dumb ideas in. Some I wish I hadn't, but but you know, it's a credibility issue on both sides, and so that's really kind of the approach that I take with it, at least.
Kevin, what about you guys? Because you're dealing with really early stage kind of IT type companies, I think. How do you guys kind of look at it?
Repeat that last part.
How do you guys kind of look at this process of individuals coming in and working with you guys? Because you're dealing with very early stage companies too.
Yeah. The way that we look at things, you know, back to your question about the, you know, what makes this area kind of eventually like a Silicon Valley in Austin and New York. Rick did a great job explaining some of the infrastructure pieces that start. It's some of the building of entrepreneurs, and you'll see that through the efforts of people like Reservoir Venture Partners, NCT, the Center for Entrepreneurship. All these things that are taking place in Columbus now are setting that stage, and we're all looking for those serial entrepreneurs and trying to find ways to more rapidly help entrepreneurs get businesses launched, exit successfully, and get back into the game and do it again. So as QStart, we start to look at it. What we're trying to do is trying to get people to market very quickly, get them to revenue, get them to be able to get additional funding, because half of our companies are funded by investors, both in and outside of the state. Half of them are entrepreneurs that are bootstrapping this, trying to get to a point where they can sit down with an angel investor, have a conversation that's meaningful, and raise additional capital. One thing that is going to help us continue to do that is by launching these companies more quickly, because one of the things I see, and you guys may disagree, so hopefully I don't set off a controversy here. When I look at the state of Ohio, we've got so many things going for us here in Central Ohio and as a state for launching companies. But I do see a challenge where we have people that are investing, are trying to make this a wonderful place to be, drive economic development. We prop up a lot of companies. The challenge becomes, unlike a Silicon Valley, which, you know, they do have their own challenges, but everybody looks to them as this is the end all for tech, is getting that additional capital. So now we've propped up the company, they're having success, now they really need to step on the accelerator and grow, and where's the additional capital for that? And that's one of those areas that all these things that Rick was talking about, trying to fill in the voids, trying to make the resources available, like the SBDC, TechColumbus, the VC partners here in town, the people like QStart, which was started just to help with this, is to drive that, because the more companies we continue to launch, the more we will attract additional capital to the area. The more that the funds that are in the area, the NCTs, the Reservoir Venture Partners, et cetera, the easier it will be for them to start additional and larger funds so we can continue this growth. So it's just kind of a process, and one thing that we're counting on is that the people we're launching, that we'll be able to get them to be successful, have that track record, so when they go back to Steve and other people, they'll be able to say, hey, I'm ready to do my next venture, here we go, let's get started, and we can just keep rolling that out on many multiples.
Okay, I want to move to something, kind of one more topic real quick, and then we'll try to wrap up. Carolyn, can you talk, if somebody comes to you and says, okay, I want to go talk to, I've got somebody that wants to invest, or I'm looking for investors. I mean, from a legal standpoint, because we talked a little bit about this at the very beginning in your intro, I mean, what should they be thinking about? How should they consider setting this up? And I know this is could take the rest of the afternoon to do, but to talk about. But I mean, just what do they need to be thinking about in terms of kind of vehicles?
Okay. Well, this part of that I'm about to talk about is not really legal, but being extremely prepared when you sit down and go talk to people who might be interested in investing in your company. I mean, have some information on you, have answers to questions, have your research done. You know, look like you've done a little homework. I think some of the things that need to be taken care of when you approach someone is you need to let people know, yes, I've started this company, I've spent a lot of my own money and a lot of my own time, I've formed a legal entity, I want to put together some agreements to put everything in writing that we agree to. But the thing we like to start with, and I mentioned this before, is sort of like a letter of intent. It's a term sheet that says, look, you're going to give me $10,000, and in return, this is what, you're going to have ownership of this company, and it's going to be, some of the terms that would be discussed is it going to be common stock? So is the person going to have voting rights? Or do they want preferred stock, which, gives them rights to distributions a little bit sooner and better rights in liquidation or in a bankruptcy? There are other vehicles you can use to sort of dip your toe into an investment, a convertible note. So let's say you don't totally trust the person's going to succeed, but you still want to give them the money. You use a convertible note that allows a person to loan you money that they can then convert that document into ownership, stock or unit ownership later. There are so many, I don't even know where to start, but there are just so many different things you need to discuss before you come to an agreement. The term sheet helps lay out all those different terms, and then eventually you will sign something called a subscription agreement, which will basically say, this is an investment, we've disclosed everything to you, you acknowledge that. And then I know we were talking about putting things in writing at the beginning. When you first go into a venture with someone else or other people, it's really exciting, and you were talking about your friends. It's fun, everybody's happy. Well, our job is to provide what I call them the two main things that we provide are options at the beginning when you're happy, which will then avoid litigation at the end when you're not. People are like, I don't want to spend that much money on a lawyer drawing up these documents. Believe me, I understand that, but think about the mess at the end of the train, at the end of the road when you're in, and maybe you didn't experience this, but I've had people come in. Yeah, I've had people come in and say, we don't like each other anymore, what are our options? And they didn't want to pay a little bit at the beginning to avoid the litigation at the end, and so we see people getting into these massive lawsuits, and they spend more money than the company's worth, and it just doesn't make sense. Just get prepared. Think about what you want to give people and what you want to get in return.
The thing, I guess, that is important to that note is that it's not all about, okay, they're going to get 20%, they're going to get 50%. I mean, there's other ways to do it. TechColumbus has different vehicles, different ways they do it, which are great models. Good attorney can help you with that. We can give you some guidance on those types of things. So, it's not all about, okay, I need to do, this, and I got to sell this much to the company, especially when I don't have that much going with it yet. So there's other things out there that you can get.
Even if you're doing it for nonprofit, and that's what I'm doing, should I look at it the same way as the profit, going in partnership with certain grants that we're getting together with, inviting together, same type of mindset?
Yeah.
You deal with anybody with nonprofit?
I don't do nonprofit work, but I've worked with some other attorneys that assist some of my clients who want to do these things. And it's always a good idea to have these plans in place before. The vehicle's a little bit different for a nonprofit, but having these agreements in place at the beginning and sitting down and talking to someone who works in that area, it will save you a lot of heartache.
Yeah, my experience has been with nonprofits, it's almost more complicated. Because you're not paying taxes, and you got to, cover all that stuff.
The accountant is key in that as well.
Yeah.
In the nonprofit, there are a lot of laws and rules you need to comply with in that area. Yes, someone who specifically does nonprofit, that's their specialty.
Okay. Yeah. We got a question right here.
For your initial startup capital, whether you're going after just an individual, friends and family, or a VC, like I said, probably be more along friends and family, but that's typically structured as equity versus debt borrowing. Is that correct?
I don't know. The question is, if you're going after kind of early stage funds, maybe your first fund and funding, going friends and family and things of that nature, the question is that usually structured as equity? I mean, thoughts?
It could be either. It's whatever they're willing to do. Do they want to loan you money with the understanding that you're going to pay them back, or do they want to give you money that they may or may not get back? So it's kind of sort of like, what's your leverage and what are they willing to do? I've seen both.
So if it is debt, like a bank, is it just like a bank loan, and that there's a percentage, interest rate that you agree to, and if you default on that, then
yeah, it's very similar to that. There's the amount that they're going to give you, and then you pay them back with interest, and there's usually a maturity date, and you can make payments over time, or you just pay one balloon payment at the end. But yeah, it's similar to that.
The beauty of kind of working through something like that, or she mentioned a convertible note, the note which converts to an equity percentage later on. is that when you get this early stage funds, if you sell X amount of equity to Uncle Joe, two things going on. Number one, you're setting a valuation for the company, which may or may not be real. The second round, you come to TechColumbus, or you go to QStart, or go to Steve, or go to an angel, or something like that knows what they're doing. They're going to make you change that. And then all of a sudden, Uncle Joe is, having a lot less percentage ownership, which he's going to get diluted anyway. But depending on how that was explained to him up front, is going to determine how well the Christmas dinner is going to go, and Thanksgiving and stuff like that. So, so again, thinking that through. And I need to kind of wrap, but that is a great question in terms of those early stage vehicles, is thinking about how you're positioning that, because it does have an impact on what happens later on. Things like that. I'm going to take just going to take the one question, and then I want to wrap.
Corey, this gentleman says in the early stage, borrow money from the friends and so on and so forth. Is this a borrowing note? Stay inside the company, or we can register somewhere, just like leverage a house. Then we have to go to county record office, register. Do we do something like that, or we don't?
No, generally the holder of the note holds on to the original. You can execute a couple originals. I like to get a copy of them, the signed version. It's not something. It's not like a mortgage that you go file, but yeah, it's something you want to hold on to if you're the holder of it. So, and your attorney should have a copy too. Yeah.
Okay, sorry. All right, we need to wrap up. I know that I think Caroline's got to get out of here. She's got a client appointment. So let's kind of go down through here. One thing maybe you want to leave with everybody here based on your experience and things of that nature. And we'll start with Caroline in case she does have to get out of here.
I'll say this again. Provide options for yourself and avoid litigation. It's really that simple. There are a lot of different ways you can do things, but just keep in mind these documents and the terms are extremely flexible. There's a lot of things you can do. It's just not like, I don't know if anyone's seen Shark Tank. I hate to bring up another show, but it's not like that. You don't say, here's my idea, and someone says, I'll give you, $1 million for 50% or 80%. That's just the tip of the iceberg. There are so many other terms that need to be discussed.
That was the original model for TechColumbus.
Oh, yeah, Shark Tank, that was it. I wish it were that fun. Yeah. So the thing that I will say, learn all you can about financing and about growing a business, either not funding it or funding it. Very often people will, I'm sure, go to you and say, hey, I've got this idea, I want investment from venture capital. It's the wrong timing, it's the wrong place. Know the stages of money and how that money works. And money works differently in some areas. Here in Central Ohio, it has been fairly linear. It's fairly structured because we have a great infrastructure of TechColumbus, the Ohio Tech Angels, several VC firms. We all work together to push companies forward and pull companies forward. And so understand the ecosystem in which you're working. Don't make assumptions. Spend a lot of time learning about that. It'll pay dividends in the future, literally.
What I would leave with is think of financing as a continuum. There was a panel before us of bankers. And it's similar to what Rick said. There's a time and a place for some senior debt. It's probably not going to be at these early stages, so don't spend a lot of your time on that. And I would think of equity as being very precious. If I was starting a business, I would do everything I could to avoid having to raise venture money. I would tap every source I could think of. I would think of all the ways I could accelerate revenue generation and prove out what I'm doing, not just for my investors, but for me. We see people make so many assumptions. If I build this platform, I can sell this web-based product for $50 a month. Well, on what basis do you think you can sell it for $50 a month? And the answer is generally, I don't know. And the more work you can do around that, the better off you are. But just think of financing as a continuum, and equity is very, very precious, and protect it to the maximum extent possible.
And actually, I think both you guys tapped on two of the things. One I was going to say is make sure to take the opportunity. One thing we've got that's great here in Central Ohio is excellent resources and excellent people that are willing to sit down and just talk with you over coffee, pick their brains. You know, Rick, Steve, myself, anybody in the community. I can't really think of too many people that aren't willing to share their knowledge, because there are a lot of potholes you can step in, and there's some that you can step in that will burn bridges you didn't even know you needed at some point. So take the time to understand it. Leverage some of the resources like the Ideas to Deals site. Mike's got some great information there. Another good place for educational material, especially around how do you engage with people that are like angel groups and things of that nature for that next level of funding after your friends and families. Look at the Angel Capital Association website. They've got some great resources out there on how to locate angels, how to speak with them, whatever the case may be. And of course, if you're going through the TechColumbus process, as Rick said, there's a very tight family here and a very defined process to get from the early stages all the way through a later stage VC round, and everybody's here to try to make that happen, because frankly, I think we all just want to see Central Ohio be a better place, and it only happens by creating businesses, creating new jobs, and everybody succeeding together.
Great. Thank you. We got to wrap. Let me get a round of applause for the panel. Appreciate you guys' insight. A couple of things, quasi-housekeeping. As I said, I know I'm flipping around these slides. This is on the website. So if you go, this presentation, if you go to spdccolumbus.com/ I guess resources or something, it's on your agenda. Just go check that out. And this is on there. A number of different articles are on there that relate to what we talked about just now. Things that I've found in the past that I lean on, a number of different links to some articles that I've written. So a lot of really good stuff there. That's up now. And we're going to continue to augment that. So hopefully if you go back maybe Monday or something like that, we're going to try to get a lot of these links up that were mentioned today in addition to that. So give us a little bit of time, but there is a lot of stuff up there right now. Before you go, in the black folder, you should have an evaluation. If you could please complete the evaluation. This gives us a sense for what you're looking for, what your experience was, what we can help you with down the road. You can either leave it where you're at, you can leave it at the table up here. As we mentioned earlier, anyone who would like to directly engage with the SBDC, we have some of these here. You can complete this and we'll connect you. And again, I want to thank everybody who participated today and helped us out. And again, this was people helping us out with the panel, the bankers, the presenters, everybody on the VC panel. We really appreciate all your help and support. Again, we want to thank the City of Dublin and the Dublin Entrepreneurial Center for hosting us and being a great partner for us going forward, as well as TechColumbus, which is a great resource here in Central Ohio. So with that, did I forget anybody? I don't think I forgot anybody. I guess the SBA, Columbus State, everybody who gives us money to do what we do, we really appreciate it. So again, happy holidays to everyone. We'll look forward to helping you as we go forward. Thank you.